Figures for retail inflation as well as industrial output were put out just a few minutes back. While retail inflation has come in at 5.66%, industrial output is at 5.6%. Both good figures. Today we're joined by Aditi Nayar and Indranil Pan to share their thoughts. Thank you so much for joining us. Aditi, I'll start with you. So, what's your quick take on today's figures, industrial output as well as inflation?
Thanks, Pallavi. Well, certainly the CPI inflation number has come in a little bit lower than what we were expecting. We had penciled in about 5.8%. And I think most of the internals are really quite good, except for the fact that cereals didn't fall as fast as what we had expected. So, as far as the March numbers are concerned, that I would say is the one thing that we were a little negatively surprised by. Otherwise, the other internals are quite good and mostly in line with what we were expecting. Going ahead, my biggest concern on the CPI side would be the impact of a heat wave on perishable prices in the immediate term. As far as IIP is concerned, it tends to be a little volatile, and certainly, we had penciled in a growth of around 4.5%. 5.6% is a fair bit better than that, but it tends to be a very volatile index. Internals wise, the consumer goods data is much better than what it was last month. So I would say that that's probably the biggest positive within the IIP internals.
All right. Indranil?
Yeah, so I think Aditi has more or less put the IIP in perspective. So I will not touch that. My comments on the CPI is that we were actually expecting a 5.66, so we are on spot over there. But having said that, I think to a certain extent, the drop in the inflation has a base effect from the last year. Milk prices continue to be firm. Pulses have actually gone up. Cereals, yes, cereals have come down. But the whole fact of the matter is, and as Aditi also pointed out, if there is a loss of crop, either due to the heat wave or due to truant monsoons, and if that tends to affect the global supply of crops also, and provided that India goes to the international market, then international prices also go up, and that could be a negative worry for inflation going forward. On the core side, I think, yes, the core did come down. But if I look at the month on month, that continues to increase. So I'm not sure whether or how much of a comfort that you can derive from this inflation number, because the next 5 to 6 months, we should see the base effect playing through and pulling inflation lower. And inflation will probably rise thereafter, once again from the lower base of the current year. So broadly, I think, yes, inflation will be on an average basis lower for FY24 from FY23. But I think there is no indication from my side that this can provide an opportunity for the RBI to do anything.
All right. So both of you did touch upon one of the risks, that's the trajectory of the southwest monsoons going forward. I do want to ask you a little bit more about that, especially considering we got the IMD's forecast yesterday, and the IMD expects a normal monsoon. That is an announcement that does appear to bring immense relief to the agricultural sector. However, the SkyMet, a private forecasting agency, the day before said that it expects the monsoons to be a tad below normal. So, Indranil, I'll start with you. How are you reading this?
So, first of all, I don't know who to believe at this point in time. In the sense, also let us understand that if I look at the SkyMet's projection very carefully, it actually also says that the monsoon could be delayed by 10 to 15 days. Now, both of these estimates have a model error, which is about plus minus 4 in terms of the IMD, and a plus minus 5, if I'm not mistaken, in terms of the SkyMet. So finally, we might still have a sort of a precipitation which can be good. But then the worry is, and this only time can say, then the worry would possibly be, and it will be more clear in the second estimates of the IMD, in terms of how the distribution of the rainfall is likely to pan out. So those are still critical sort of elements in terms of the monsoon that we need to track.
All right. Aditi, anything you'd like to add to that? Also, how much of a concern does this pose to the RBI's forecast as well as yours over the next few months?
So, if we go by the IMD's forecast, so they're saying that the monsoon will be normal and that the impact of the El Nino will basically be there in the second half of the season. And if we take the reservoir levels where they are right now, they're pretty healthy by historical standards. So if we don't have a delayed start to the monsoon season, then the Kharif sowing actually may take place in a reasonable manner. It will only be in the second half of the monsoon season that we may get into a problem if we go by what the IMD has projected yesterday. And that is something that wouldn't affect sowing, but it would affect the yields later on. So that's, would have an impact on food inflation, therefore, later on in fiscal year 24. As far as the MPC is concerned, by the time they meet next, at least we'll be past the June 1 threshold for the monsoon having started. And we'll have better clarity as to whether the monsoon is delayed or has it come in on time. And at least, somewhat of an indication of how June may pan out. And that is probably what will then feed into their forecast for CPI inflation for Q2 and give them a better sense of how the food inflation trajectory may pan out. But sitting here today, I would say that MPC is going to have to be quite data dependent in the next couple of policies. And there's really a lot of moving parts between now and then.
Sure. Okay. I do want to ask you, the consensus does appear to be that while inflation will trend downward here on, it is largely base effect led. So how much of a concern do high prices in cereals and milk, for instance, continue to pose? And should we expect supply side measures to rein in prices further, Indranil?
So I don't think there is much scope in terms of supply side measures immediately, or at least we need not talk about supply side measures immediately. Because the government has in the recent past released 30 million tons of wheat crop into the market to cool off the prices. The supply side will also be linked and related to the yield and therefore the procurement. And otherwise, if that doesn't turn out to be favorable for us, as I did point out some time back, if India is in the international market trying to procure crops, trying to procure a sort of wheat or rice, then that itself might lead to an increase in the international prices also, and will affect the Indian prices too. So it's too early to talk about supply measures at this point in time. And at this point in time, and as the MPC also has taken it in their forecasts, most probably is a normal monsoon, and that's what I would like to keep it at this point in time.
Sure. Aditi, industrial output again came in at a 3-month high. It was a tad bit better than was estimated. What is your reading of industrial output and other high frequency indicators at this point? The reason I'm asking that is because while, most indicators have been fairly resilient, in recent months, we have seen a few mixed signals. What are your thoughts?
So definitely IIP came in better than what we expected, which was 4.5%. And if we look at the sequential movement, both consumer durables and non-durables have done better than the previous month in terms of how the YOY has moved between January and February. Now, for the month of March, we had a bit of a big trend. We certainly had a few indicators that got dampened because of the heavy rainfall, like coal output and electricity demand. And that's something that's probably going to pull down the IIP numbers for March. So we're looking at maybe a 3 to 4% kind of a growth in March. And if you look at Q4 as a whole, basically the high frequency indicators that we have so far, we're breaking them up into 3 buckets. So we've got one set which has actually shown a better YOY performance in Q4 as compared to Q3. We have a set which has shown a mild moderation in this time period. And then there are some which have shown quite a steep deterioration, which is mostly because of the base effect. So overall, probably Q4 hasn't turned out to be that bad. We'll have to wait a little longer and look at some of the earnings numbers as well to get a sense of how the GVA growth is likely to have moved in that quarter. But as of now, looking at the IIP data, I think we're safely in that 4.5 to 5% kind of range for GDP growth for Q4.
Okay. Within the IIP data, we've seen consumer durables, stay negative for several months now. Is it in any way indicative of spending power having taken a hit? How do you see that figure? How are you reading it?
So from my side, it does stay negative, but it's become less negative over the last couple of months. And I think what we are reading is that we've got a prioritization of spends towards services away from goods, particularly consumer durables. And that's the underlying reason.
Sure. Indranil, taking that forward, do you find some of the estimates, the RBI's estimate, for instance, for GDP growth, a tad optimistic for FY24?
I, as a market participant, can never comment on the GDP estimates of any other person. For that context, you also have the IMF numbers which have come out, which is a 5.9%, which is a lot lower even from the market participants' point of view. So somewhere the truth is somewhere between the 5.5 to 6.4, 6.5, and this basically and therefore the central tendency for me is about 5.9 to 6%. That's what I would want to believe for the moment, unless of course the Q4 numbers come out. We understand what is the extent of downside pull for growth from the global perspective, how much of interest rate increases happen globally, and whether there is any pressure on the RBI to actually provide another rate hike if inflation tends to surprise for whatever reason that may be. But having said that, the only sort of problem that I have in terms of the growth numbers going forward is whether we are still carrying some amount of a deadweight loss out of COVID, which necessarily means whether the potential rate of growth for the Indian economy, which we used to discuss at around 6.5%, that would have gone down, and that I think will be the most important factor going forward in terms of how growth performs, in how inflation performs, and in how the government's fiscal also looks at consolidation in years hence.
Sure. Aditi, my last question, but again, the same thing. Do you find the RBI's estimates a tad optimistic? I do want to know what your estimates are. And, considering the high frequency indicators at this point, considering the impact of the rate hikes that's expected to kick in now, would you believe, when do you see the RBI beginning to consider cutting rates?
So our estimate for FY24 GDP growth, the baseline is 6%. And if we have a really terrible monsoon, we're looking at a downside of up to 50 basis points below that. So 550 to 6 is the range that we're broadly looking at. So we are lower than the RBI, and particularly so in the second half of the year. So there are really no base effects, nothing really to support a very high GDP growth in the second half of the year. First half, at least this quarter, commodity prices should give a positive delta. And that is something that is going to lead to a temporary uptick in the growth numbers. And then we're going to sort of taper off. And, I would rather expect H2 of FY24 to be in that 5 to 5.5% kind of range. So fair bit below where the MPC has placed its projections. Unless we have a very quick offtake and a sustained spend on the capital expenditure side from both Government of India and from the state governments. So that is something that could boost growth and lead to outcomes which are closer to what the MPC has projected.
All right, that's it from my end. Thank you so much for taking time out for today's discussion.
Thank you.
Thank you.